Clay Patton on the Rural Radio Network, and it's time to take a look at your closing markets from a weekly perspective. We do so with Darrell Holaday, Country Futures in Frankfort, Kansas. Hey, Darrell, thank you so much for this year of great commentary, bringing us these weekly recaps and closes on the markets, both as a commodity and as a broader perspective. Coming in for the last week of 2022, though, it's a little bit mixed. Grains look higher, and livestock look pretty sideways to uneventful if you look at them just at a closing perspective. What do you make on the trade?
Well, that's right, and it's my pleasure. I enjoyed doing it. It was a week in which you look at the livestock side, and you had all this early fury in the hogs and even in the cattle to some extent, and back and forth. And of course, sometimes they get in the holiday volume like this week, where it gets kind of thin, and they'll make a move and they'll just stay there the rest of the day, and then the next day we do something else. But in the end, we kind of reverted back to the mean, if you will, using the mean last Friday close on the livestock side. Now on the grain side, we were higher to end the week across the board, and really the major factor was just we're sitting here with the dry conditions in Argentina, and the weather outlook is warm and hot generally over the next 2 weeks. The problem you have with all of this is you have to put everything in perspective. I just look at the end of the week, we're looking at 70 to 80% planted in Argentina, both corn and beans, and so you're just trying to get more of it planted. And here we're worried about a drought in January. I mean, it'd be less like us trying to bury the corn or kill all the corn in the United States in May. I mean, they're the critical time for corn down there, and I really believe in the end there's a real problem in Argentina that we can measure. I think it could be more important to the corn market on a relative basis than it would be the soybean market, basically given the large soybean crop that looks to be starting to be cut and will probably be in a reality in Brazil. But that's not the way the market trades. It tends to move when something gets dry in the United States or South America, you just buy beans and ask questions later, and that tends to be the thing that moves it. But we just don't know what that weather's going to be. It looks warm and hot late next week after some rain this weekend, and then last half of January, who knows? A lot of people will procrastinate, will reject what it is, but weather, we're just going to have to watch it, see, and that tends to move the market back and forth. And that corn, the corn market was supported by the Argentine weather, along, of course, with the soybeans. But the ethanol numbers that we continue to get on a weekly basis for the U.S. ethanol are very disappointing. We continue to see them below the previous week. We continue to see a decline, and below a year ago, in many cases below 2020, which is really hard to believe. And it really is just following the gasoline use as a whole. So that is a pressuring influence, and one that you're probably not. We're going to have to try to make up the ground to get to the projections we need in obviously the next 6 to 8 months. But January and February are not very likely to happen. Now, wheat was marked back and forth throughout the week. We ended up higher on the week. We were back and forth, a lot of strength early, maybe tied to the concerns of the Russian-Ukraine situation, and also winter kill possibilities that might have occurred over the last week and a half in the hardwood winter areas, and dryness in the southwest part of Kansas and eastern Colorado. But that's been around. But as a whole, I'd also say the wheat was supported by the fact we did see a little better export movement this week, 468,000 tons. Weekly export sales came out on Friday. On the other hand, corn and soybeans were just kind of whole-hum at 788,000, 708,000 tons, respectively. But once again, those are the factors that support it. And once again, we ended up towards the top end of the near-term range, both in the corn but off the high. Soybeans broke through some critical resistance and ran up and filled some technical gaps at 15.28 on the March bean. So we kind of did some of that activity before we fell off on Friday in the corn and the beans off those highs. And into the week was gains across the board, but they weren't overwhelming, but they were certainly there. March corn on the week up 12 cents at 6.78. The new crop December up 9 at 6.11. January beans 40 higher at 15.19. The new crop November up 24 at 14.17. March Kansas City wheat up 13 on the week at 8.88. The new crop July up 14 at 8.76. And that February crude oil up 90 cents, closing at 80.26. On the livestock, cash was better on the cattle. It ended up being up $1 in the south at 157, generally 158.9 in the north. Again, I think at the height of the better futures on Thursday, I think there was thoughts that maybe we'd end up being $2 better. And I think market got up had a little more strength in it, and it gave up some ground on Friday. We did have a very weak close in the December contract at noon on Friday. It went off the board. We had some deliveries against them Thursday night, and I think those certainly always spook out the longs, and the way it settled was certainly not a positive thing. But we've been seeing that trend where late in a contract, the last day of the contract, it ends up well below the cash market, and the December held true. Last trade was actually 154.82, obviously well below the cash markets. Hog futures generally acted the same way. They had a lot of early strength, especially in the front end of the market, coming off the hog and pig report. Most of that was tied to the cold weather and the movement of hogs to some extent, but then we realized we probably backed up some hogs. The product continues to be kind of sloppy, as opposed on the beef side, it continues to be very solid throughout. Pork product pretty doggone sloppy, and we got the February contract way out in front of the cash index, and the market had to spend Thursday and Friday retreating and getting back down to where it was just, once again, just slightly lower on the week. The cash index has bounced back up to the 80-50 area after going down to just above 78. That's a long, at one time, that we had futures trading above 90 on the February futures, and they had to give up ground and close that gap. It's just not feasible to hold the futures that far above the cash index. On the week, February cattle up 15 cents at 157.90. April cattle down 5 on the week at 161.80. January feeders down 31.83.70. March feeders 28 lower at 186.22, and February hogs 87.70 down 12 on the week, and the April hog contract down 7 on the week, closing at 95.30.
And that is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at their website, countryfutures.com. That's countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider this risk before investing. We'll talk to you in 2023.